This is Satish Paryani, working as an assistant professor in Department of Mechanical, Walchand Institute of Technology, Solapur. Today, we will be discussing some basics related to present value and net present value and the importance in project management. These are economic models which are being used to take decision or which are being used as a tool to give directions before project is being finalized. Again, the project finalization or project selection cannot be purely in terms of this economic models. Some other factors or some other models are also in parallel used to take decision for with the help of present value and net present value. So these are just the guiding tools which help us to understand whether the project is feasible as per the company's cost or company's profitability. At the end of this session, we will understand the present value economic models of project selection. We will understand basics of present value and net present value, and then a small quiz to think over it. The term present value, what does this mean? Present value means the value of future cash flows and can be found with the help of formula. This is a mathematical just a formula to understand what we mean by present value. PV denotes present value, which is equals to FV upon 1 plus R raised to N. Present value equals to FV upon 1 plus R raised to N, where FV is future value, R is rate of interest, and N is number of time periods. Now, if rate of interest is positive, as in the countries such as India, we can see that future value in this case is more, right? Future value, if we see, we can from mathematical formula just we have to see it. And if the rate of interest is decreasing or it is on a negative terms, in that case the present value is just opposite to what we have told. We'll understand this small concept, understand what we mean by present value and future value with the help of upcoming example. Please go through this example. Here we'll first understand with the help of example what is the present value of $300,000 received 3 years from now if we expect the interest rate to be 10%. Should the answer will be more or less than $300,000? Please see what we are asking. What is the present value of $300,000 received 3 years from now? Means 3 years from now, let us say this is 2022, and in 2025 if you want to receive $300,000, whether the value will be less or more than $300,000 considering rate of interest to be 10%. And the answer definitely, as I told you, the present value in this case will be less. Simple example, we can see you can put the amount of money less than $300,000 in the bank, and in 3 years you have $300,000 to solve the problem. If you were inclined to do so, like $300,000 divided by 1 plus 0.1 raised to 3, answer comes out to be 225,394. So the present value is 225,394 if we do investment right now in the bank for 3 years with rate of interest of 10%. We will be receiving $300,000 after 3 years. So when we are projecting this example is being, we can analyze in some different gives us just to give how we think of that project. If we want to take the profitability of the company with this project to be $300,000 at that time, if investment want to be $300,000 or profit want to be $300,000 at that time, so currently minimum what we can expect if rate of interest are, let us say, assuming it 10%, so definitely will be less, what present value will be less. Now the new insight is that whether rate of interest remains same or it changes, there are different lenders to this project. Whether company is utilizing their finances within their factory or companies, cash rich companies, so that they don't have any financial issues. In that case, yes, you can consider internal, they can transfer the rate of interest. Let us say, we will say that 2 projects we are considering. This gives us insight where we will need to put our money in that case. Present value and future value gives us direction about our money has to be more in future when we are considering positive rate of interest. 3 variables basically: future value, present value, rate of interest, and then finally payback, or we will call the periods. Now many times there is some simple interest or simple rate of interest throughout the year, but some interests are being charged on the basis of quarterly. When the amount is big, that really do matter for us. As we have seen, the foreign, when they try to invest in foreign investors, they try to invest in any organization, or there are sharks which invest, which they want to invest. They do consider this kind of thing because amount is big, rate of interest they need to consider, and after how many years I will be getting in that case. To some basic, we'll understand now net present value. Net present value or NPV used to calculate the current total value of the future stream of payments. If the net present value of the project or investment is positive, it means that the discounted present value of all future cash flows related to that project or investment will be positive and therefore attractive. If net present value is positive, means the project is feasible and every organization, top management or bosses or investors are more interested and they are ready to take it. To calculate the net present value, you need to estimate future cash flows for each period and determine the correct discount rate. Now we will understand what do we mean by positive and negative net present value. As I have told already, positive net present value is attractive, means it is favorable, and positive net present value indicates that projected earnings generated by the project or investment which we have done in present dollars, at present we will say in dollars or rupees, exceeds the anticipated cost, also in present dollars. It is assumed that an investment with the positive net present value will be always profitable. So positive net present value, yes, project is feasible, we can go ahead. Negative present value, immediately we cannot go, but we cannot truly take decision with the basis of single. But yes, this direction, this indication is one of the important parameter to give direction for selecting the project. An investment with the negative net present value will result in net loss. This concept is the basis for NPV, which dictates that the only investment with positive net present value should be considered. To a crux, we can simply define net present value on the basis if it comes to be positive. A positive net present value, project is feasible or we are in profitable. A negative net present value means there is investment is much more compared to our returns. The amount of effort, the amount of investment what we are doing is much more compared to what we are getting returns. So that is not at all feasible. Small thing, please think on this small statement. We will have like quiz kind of thing. Please think it and let me know what is your opinion on this, whether the statement is in positive direction or negative direction, or we can say it is true or false. Present value is the financial metric that seeks to capture the total value of potential investment opportunity. Yes, the statement is purely true, because present value or net present value, these are the financial metrics, economic model that are used to capture the total value of potential investment opportunities. The references which are we use for this are from the net. The second most important, the book from Himalaya Publication House is Project Management and Control, written by Narendra Singh Ji, and the third is Project Management by Ritas. It's her 8th edition. Thank you.